Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to talk about gold versus the M2 money supply, and kind of how this thing's all playing out in terms of the timeline perspective. We're also going to look at producer price index to consumer price index. I did post those on Twitter, and we're going to take a little bit of a look at some of these other metrics that we haven't really looked at for a little while. And I'm going to show you some similarities. These double bottoms is what I'm seeing in the charts. What I'm looking at, again, I'm just going to kind of reiterate what this is. Chart patterns is herd mentality. It's the collective psychology that people scribe out in these charts. And I'm using it in ratio charts, and it scribes out in ratio charts somehow. I'm not sure how it does that. It's really, when you start diving into the chart patterns, guys, it's kind of like a disbelief that these things continually repeat over and over, and even these patterns repeating on ratio charts, which makes like no sense to me, because on a ratio, it's two different assets moving against each other, charting out double bottoms and these other things and falling wedges and all this stuff, even with different assets. So again, if you need any help with this bull market coming up, definitely subscribe to the finding-value.com platinum membership. I go over a lot of this stuff, not just this stuff, but you can ask me questions directly. I have got really highly leveraged plays. You can ask me, what are some plays that might not be as leveraged? I can't give financial advice, but I can at least show you and tell you how I would go about doing something, maybe get a different opinion, and you guys can make up your own decisions on what you'd like to do. But let's dive in here. I'll give you my financial opinions here and show you what's going on. So behind me, I've got the gold to the M2 money supply ratio. And if I were to scribe out a pattern that I typically see is usually go up a lot, you hit some sort of top, you do like a little bit of a double top pattern, you come all the way down, you scribe out some patterns, and then you kind of get this lead-in pattern. It comes down, comes back up. You get another thing that looks something like this. Then you come back up, and this is called the double bottom. You usually come up, you come around this general vicinity, and then you take off. Maybe it's a ascending triangle or some sort of continuation pattern. It could be a megaphone pattern where this gets a little bit bigger and does something like that. It doesn't matter what it is. It's all the same. You see this pattern over and over and over. And what I see below is that same pattern. It's this pattern here, the lead in, the valley of despair, and we're putting in that double bottom. Now, this thing that you want to look at is a massive pattern. This bottom here starts in 2002. The bottom where we are now is in 2022. So this is a really long, expanded pattern. It means it's going to take a long time. But we're where I think at a close to a double bottom somewhere in this general vicinity over the next year or two. And that will be a good time to be looking for precious metals, gold in particular, investments, because they're going to outperform the M2 money supply. Whether the M2 money supply expands rapidly or not, I think that we're going to see an outperformance, and I think it will expand rapidly. And I think gold's going to do some crazy stuff. That's kind of my guess. Obviously, I don't have the crystal ball. I'm not shaking the 8 ball back here saying, outlook is likely or whatever that says on it. But it does look really good for an outperformance of gold. Now, let's just look, and I'll show you the pattern that I see over and over, and I'll show you what I mean. So this is Ethereum. Ethereum, I'll just say it's something that we don't have any fundamental value on. The fundamentals, I don't know how to value this. So what this is basically trading off of is purely the human psychology and herd mentality here. If you notice and you look at this pattern and the one that we just were looking at, it's the same pattern. You get a big move higher, you get that move down, the lead in, the double bottom, the pattern that goes sideways, and then the break. There's that pattern over and over and over of the herd mentality. So if I were to look at this pattern and say, okay, let's just take this thing and copy it. So I'm going to copy this pattern in here. So we take this and we're just going to copy it there. I copy it and I'm going to go back to the gold to M2 money supply. I'm going to have to put on log so this thing can take it because it's such a big pattern. So this is the top here. You can kind of see how this thing plays down. And this pattern is stretched way, way, way out. You can see kind of how this thing rolls here. But there's the pattern, and it doesn't have to match perfectly. What we want to see is we want to see the general ups and downs and how this matches up. So this guy here is that guy there. This is kind of matched up well. It comes on up. The tips are matched. I think this is probably where the bottom is, roughly speaking. We're going to probably come up. We could have a big crash of some sort and then a big old rally into a much, much higher level. You can see that this is the same spot that it typically gets stuck at. And I didn't take the big move afterwards that went just gigantic to the upside. Now, this is obviously on a gigantic pattern. And the time frame is, it may not be perfect. And I'm not saying that I know the exact time frame. I don't know if this is going to be exactly, I don't know if we're going to drop this big. That's an accentuated drop based off of external factors in the market. So, but this pattern is pretty much at the bottom here. And sometimes when this comes back, it only falls a little bit of a way. It doesn't go all the way down like this. And sometimes it just does a small one. We don't know what that's going to look like necessarily. But overall, big picture view, if you take a long enough time frame, I think that gold is a good spot to be looking for a store of wealth versus the dollar. So that's one thing I wanted to hit on. And again, looking at Ethereum, I'm just going to go back here and look at Ethereum one last time. So this is the Ethereum here. I'm going to get off log. I'm going to go to the dailies. And this is the pattern that I see that plays over and over, is this pattern here. Obviously, I didn't take the big move higher. That pattern we see over and over and over. So let's look at the PPI to CPI ratio. I think this is the one right here. Yep. So I'm going to kind of zoom out here. We've got another big downtrend. And if you look, we've got that same type of double bottom pattern. I don't know if this one will fit on here. Let me see if I can get it to fit. It's going to take some manipulation. So 1 second, guys. Let me yank this thing up. And do you see what I see every day as a warranty? Okay, just kidding. So there is the pattern, right? There's your, I gotta line this thing up, get it somewhat lined up. So there's your pattern, guys. There is your pattern. And you even have a declining pattern here that I'm going to throw in there. A falling wedge. We broke that to the upside. We're coming back. Where we are now, and as you can see, this is aligned right here. That's what I'm aligning. And we've come on up. We've come on up. We're probably going to move sideways here for a little bit. Flag pattern. Pennant pattern. I don't know what that pattern looks like. I don't think it's necessarily relevant. So what does this all mean? It means that this pattern is most likely, and when I line this all up and you guys can see it, let me get this pattern out of here, guys. Most likely what's going to happen, and again, I don't have the crystal ball, is this is going to move sideways to some degree. Maybe it does a falling wedge. Maybe it comes up and does like a megaphone pattern where we come up and down, and then we break. This is the PPI to CPI ratio. This is the producer price index outproducing the consumer price index, which means when this goes up, we're in an inflationary environment. What this is saying is that at some point in the relative near term, we're going to go into an inflationary environment based off of the way that the herd is setting and investing and aligning this up on this double bottom here. It means that the PPI will outperform the CPI, which is an inflationary movement. This here is an inflationary movement, and we're in a disinflationary movement here. Now, I understand people, they think they can time all this on the short term. I'm not worried about timing this in the short term. I know everybody, if you're down 30% in your portfolio or something like that, I can understand how that could be concerning. But you're going to get those types of movements even in a bull market. So it's hard to discern the difference between a bull market and a bear market in commodities that are that volatile. You're going to get these large consolidation periods, and we're in a consolidation period that's happening right now. So I expect a consolidation period, then a potential move higher. What this is telling us that this here is where the consumer price index and the producer price index was underperforming the CPI. That's why it was falling and falling and falling. This is from 1948 all the way back here to the bottom of 2000. And then we did a double bottom here. The double bottom happened in 2020. These were your best investing areas for a lifetime in commodities. And this is a double bottom. So what I think is happening is we are seeing an entire shift in the markets, a paradigm shift that is occurring right in front of us. This is from a world with growing commodities, growing labor pools at cheaper and cheaper labor rates. All of these things combined, we had a production of goods producing at a faster pace than your M2 money supply. It's things that were growing at faster and faster rates and declining in price based off of resource abundancy. I think that's the way that I am viewing it. Now, when I look forward and then we get a bottom one and bottom two, I think that this point onward is going to be a completely different paradigm shift based off of the way that the herd is lining this pattern up. And what comes in the future, I think, is resource scarcity, not resource abundancy. Increased prices of many, many things. This here is a complete paradigm shift in the markets. If this pattern is correct in the way that I'm reading it, which I think it is. The ideal buy point for this type of setup is actually right where we're at for whatever thing it is doing. So when we look at this and you look at the producer price index in relationship to the consumer price index, this means that the producer prices will always are going to outpace, not always, but will outpace the consumer price index. It's going to mean that margins in companies are going to decline potentially. That is what it's going to say. And if we get a declining margin, I think the stock market is going to come under a lot of pressure. And that commodities are going to be the thing that you want to own. Now, I don't know how long this is going to last. I don't know what exactly this is going to look like. It could last for the rest of our lives. We could see prices go up of many things for the rest of my life. I don't know how long this will last. And if it lasts for 20 or 30 years, if it lasted from 1948 all the way to the bottom of 2000, this is what people know. This is the paradigm that everyone's looking at the world. And what this is going to feel like, it's going to feel like life is going to get harder. Life is going to get more expensive. It's going to feel like I'm running uphill. I'm going to be out of breath. And I think that's what's coming. At least that's what the chart seems to be showing. And I don't know if we're going to come back down a little bit and put in like a cup and handle pattern. There's your cup and handle, something on the lines of that. I don't know what it will necessarily look like. I don't claim to know the future. I'm just saying that the herd is lining this thing up, guys. And I'm going to play it like this is going to be the case. Like we're going to go into an inflationary environment. Let's look at some other charts here. I've got the M2 money supply versus the GDP. And what the PPI to CPI ratio, if that were to go higher, what we would see is your M2 money supply should be outpacing your gross domestic product. We were in this goes back to the 1959. We were in an era where we were going back and forth, and this is basically your imbalances in the market of money coming into the system and the system responding to that increase in money supply, et cetera, et cetera. But we've broken out of this. There's your breakout, there's your consolidation, and then your break higher. What this is telling us is that they're creating money at a faster pace than we can grow the gross domestic product. This is inflationary. Now, where the money goes in the system is highly dependent on the market conditions and the supply of commodities. If your money comes into the system, it can go hide out in financial assets, which it did from 2009. This is 2009-ish onward. That's where they were all hiding. We could see it in the ratios. We could see that all the money was piled into stocks. But now that's reversing. We're coming into shortages of commodities, like massive shortages. And if the M2 money supply continues to outpace GDP and your GDP is constrained by commodities, there's your problem. That's going to basically shift money back into precious metals. And that's where it ties into this chart. It's going to shift the M2, the M2 money that's out in the system is going to shift into gold. And if that shifts into gold, what's going to happen is you're going to get an accounting mechanism where gold reaccounts for the M2 money supply and goes all the way back up to the peak where we get a full, possibly a full accounting of M2 money supply and the gold price. And I'm not saying this is going to be quick. I'm going to say it's going to take some time. I just drew that higher. I didn't draw it in terms of how long this will take. So, maybe it's going to take some time and then work its way higher into the 2040s even, or something on the lines of that. So they're all interconnected. All these charts are interconnected. And I'm just showing you guys kind of what I think is coming. Yeah, I do that all the time, guys. And this here is a chart to watch, the M2 money supply versus GDP, because if GDP is constrained, they're screwed. They're screwed because you're going to get massive inflation. And all of the charts are lining up for an inflationary period. The exact timing, we could go sideways for 6 months to a year. We could go down. We could have a recession. We could have an end of a cyclical, shorter term cycle in this big secular trend. I'm showing you the big picture secular moves, the 10, 20, 30-year type outlook. That's what I invest for. I invest for the rest of my life. I'm only here for a short period of time. I'm sure just like everyone else, we have a lifespan, and you have to invest given whatever cards you're dealt with during your life. I wasn't a baby boomer who was born in the 50s or so, was in prime working years and, in your 20s, 30s, 40s, and 50s, in a gigantic 1980 on bull market in stocks, which the baby boomers very well, I'll say, enjoyed. Now, I think we're in a commodity boom. And it's highly important to understand when this stuff flips like it did in 2020. If you don't understand when that flipped, you could get caught on the wrong side with your pants down. And nobody wants that. Nobody wants that. So, if you need help in this next bull market that's coming up, looking at commodities and other types of investments of precious metals and whatnot, don't forget to sign up. Finding-value.com Platinum membership. If you like the content, give me a thumbs up. And if you like the channel, definitely subscribe to the channel. Go ahead and share it. Go ahead and share this information. Share it with your family. Share it with people who you care about and say, hey, look, this is what's necessarily coming. I know a lot of people don't look at charts. They may not understand it. I understand that. It's just a bunch of squiggly lines. This guy, but if you look at him for a long time, I guess like me, and you see these patterns repeat over and over and over, with on the big picture view, the likelihood of these becoming true is quite high, actually. Things can get delayed, they can get skewed for years. So it doesn't mean just because the pattern's there that it has to happen immediately. It could take a long time. So keep that in mind. But that's what I've got for today, guys. Hopefully you enjoyed the content, and we'll catch you next time. This is Finding Value.